Hey, what's going on, guys? Sterlingtheinvestor here, and in today's video, we're going to talk about a stock that I'm pretty excited about in 2025 and strongly considering adding to my portfolio, and that stock is Applovin. And Applovin is a mobile technology company that provides AI and software solutions to help customers grow and connect, to help businesses grow and connect with their customers through their audience through primarily mobile devices. So the first thing I want to talk about is I wish I got into this stock a lot earlier. I think we all did based on the 700-800% growth that it saw over the past year. Just think about it. If you would have put $1,000 into that stock, you would have had $7,000 to $8,000. If you would have put $10,000, you would have had $70,000 to $80,000. This was an absolutely life-changing type of opportunity, and like I say, I wish I got in a whole lot earlier, but hindsight is always 20/20, and there's no woulda, coulda, shoulda thing in the stock market. We want to try and avoid that type of mindset. So with that said, we're going to talk about the stock and how it looks now, and if it's worth getting into now or if it's too late. So key numbers. I want to go over the high level metrics just to give you guys a quick overview of the stock. It's trading at about $343 per share right now. Market cap of about $114 billion. The trailing PE is 103. The forward PE is about 46 and about 59.5 EBITDA. The price to sales ratio is also sitting at 27, which is really good. So the pros of investing in this stock. So their management is extremely aligned and invested into this business. So that's one thing you always want to be wary of and be cautious of, and make sure that there's alignment there. They are disrupted in the industry, and they are significantly outperforming their competitors at the moment. Quarter after quarter, earnings are getting crushed. This company is growing revenue very, very strong and at a very, very rapid rate. It's an AI-powered company, and we all know that AI is very quickly becoming a larger and larger part of our everyday society. So if they're going to be a leader in that space, that's always a good sign in terms of a company to invest in. Someone that's a leader in an emerging industry is always a good thing for the most part. The industry of advertising isn't going anywhere, and like I say, their primary function in their business right now is connecting business owners with their audiences, primarily through mobile devices. However, they are going to be looking into getting into the e-commerce space as well, which could also present opportunity to see this company have explosive growth here in the future. And kind of as I just mentioned, there's still room for explosive growth, but not the 700-800% that we saw over the last year or so. However, there is still opportunity and potential for this company to significantly outperform the broader stock market in general. And the biggest thing that I'm excited about is, at least at the moment, they have a proprietary AI algorithm that's driving their business. They're able to identify things through this algorithm that other advertisers aren't able to, and it's giving their clients and customers kind of a leg up in the space, and that's, in my opinion, what's primarily driving that business. So the cons of investing in Applovin, I would say they have a very, very large amount of debt, which a lot of publicly traded companies do. They raise the money and they finance a lot of their operations through debt, and they're going to have to maintain those very high margins in order to stay on top of that. However, just based on the earnings that they have and the growth that they have, I don't see that being a big problem for them. Competitors like Meta could enter the space, and that could potentially be problematic because they're just a behemoth of a company. You could see Meta, you could even see Amazon, someone else trying to penetrate this space, and that could be very hard to compete with. On the upside, the company could get acquired by one of those companies, and of course that works out very well for them. Explosive growth over the last year, which is great for investors that were already in the stock. However, if you're thinking about buying now, just be cautious that we could see a major pullback before it takes off again. So be very cautious of that. If you get in at 343, you could see the stock pull down to 300, down into the high twos. and we'll talk about this a little bit later, analysts are saying in the worst case scenario that they could see the stock even fall down to about $180, which is nearly a 50% fall off from the high of where it's at right now. So just be very, very cautious of that. Maybe consider dollar cost averaging if you want to get involved in this stock versus just throwing all the money in at one time and then being subject to that market pullback at the absolute worst price. The stock may be overvalued relative to expected growth for the upcoming years because right now a lot of it's being priced in based off of the previous performance of the company and the stock, and that's got the value very, very high. However, we can't expect that type of growth and that type of performance going forward. So there may be some discrepancy in the stock's value in that regard. So what are analysts saying? Analysts are expecting Applovin's earnings to grow significantly in 2025. Most analysts are grading it as a moderate buy. And the reason I wouldn't say they're grading it as a strong buy is just due to that explosive growth that we mentioned earlier, that I think a lot of analysts are seeing a potential pullback in this stock. So it's probably not the strong buy right now at this point in time. The upside prediction by most analysts are saying somewhere between $380, $390 per share. That'll put us at about a 12 to 15% return coming up this upcoming year, which is a good return, not the 700 to 800% that we saw last year, but 12 to 15% is still really good. And I think it could possibly go a little bit higher than that. But if you wait for the pullback and you get in at maybe 300, 320, maybe 290, if it pulls back that far, you have an opportunity to make a bigger return, maybe a 20, 25%, 30% return if you wait to get in. However, there is a risk of waiting to get in because the ship could take off and your orders never get filled at the price that you want to get into the market. So that is the risk of waiting for a pullback. The downside possibility by most analysts that I've seen is they've seen the stock could go as low as $180 per share. And that's that pullback we were talking about earlier. Personally, I don't see it having nearly a 50% pullback. I think we could see anywhere from a 10 to maybe 25% pullback. So anywhere from 310 to the high 280s, the low 280s, high 270s. I think we can see price pull back to that level. I don't see the price pulling all the way back to $180 per share. But that's just my opinion. Of course, do your own research, do your own due diligence before making a decision on this stock or any other stock. So I hope you guys found this video informative. If you do have any questions, please leave them in the comments below. Shoot me a DM on Instagram. Please feel free to connect with me over there at Sterlingtheinvestor. And again, I hope you guys found this video informative, and I look forward to talking to y'all again soon. Have a great day.